We are seeing, as I said, divergent monetary policy right now, perhaps more divergent than we've seen after a long period in which, broadly speaking, monetary policy in the major economies was moving in broadly the same direction, with obviously different degrees of stimulus. That now does seem to be changing. The Fed has now begun the process of raising rates, 2 interest rate increases in just over a year, widely expected to increase rates further. ECB, meanwhile, continues to still be in stimulative mode. Bank of Japan, too. Signs of the Bank of England maybe perhaps steadying the ship. How should monetary policy makers navigate now, both in these major economies and around the world, navigate these changing circumstances with the implications that these divergent rates have for the rest of the world?
Well, I believe, first of all, the divergence is not such a bad thing. So the normalization of monetary policy in the US is a very positive sign. That means that the US economy is on track, and it's all normal that there certain divergences take place. So I do also not believe that the divergence really becomes extreme. So the more interest rate increase in the US, probably the dollar becomes stronger, and also the situation in Europe will improve. So also there, interest rates may increase over time. And maybe a third point is we do not exactly know where exactly the new equilibrium real interest rate is. So how far we have to increase rates is still an open issue. So I would expect that all central banks, and especially also in the US, the movement will be gradual. And from that perspective, also the disruption in the market should be to some extent limited.